Hello, everyone. This is Jordan. Welcome back to the Daily Gold YouTube channel. And for those who are new, welcome to the Daily Gold YouTube channel. This video is being recorded on the afternoon of Friday, August 8th, 2025. Thank you so much for tuning in. For those who are new, each and every Friday, we wrap up what happened in the precious metal sector, gold, silver, the stocks, and we look ahead to the next couple of weeks. And boy, what an incredible week it was for the precious metal sector. The stocks really took it away. They really shined. The silver stocks, SIL, SILJ, up 14% and 15% on the week. GDX, GDXJ just up over 10% on the week, absolutely exploding. And folks, this is why I am a buy and holder. This is why you will hurt yourself if you try and trade in and out of the sector. Even though I have been cautious in recent weeks, expecting more of a consolidation, looking for more weakness in the stocks, I didn't sell out of my positions, nor would I advise that. Because in a bull market, the surprises are to the upside. And if you've been watching these videos, you know that every time there's a correction, I tend to be a little too bearish, and then the correction ends and things explode higher. That's how it works. And that is why in this bull market, you have to buy and hold. Be a buy and holder, or when you have huge profits, you trim along the way. So again, incredible week for gold and silver and the stocks. Let's delve into the charts and look ahead as to what could happen in the next couple of weeks. So here's our market overview. Gold here, silver divided by the stock market. Gold against the stock market here, GDX, GDXJ, 10-year yield, stock market, SIL, the silver stocks, and these are about, 6-month daily bar charts. The moving averages here. First one's the 50-day, then you have the 200-day, then you have the 400-day. Okay, now that you know, let's get into the specific charts. Gold, this is the spot price of gold. Now, stock charts change their data, so they are showing the spot price here. The futures market tends to be what everybody looks at as far as charts, and I'll get into that more in a moment. But gold has not broken out in the spot market. We can see here the spot market. It remains in a bullish consolidation. Really strong rebound here in the mid-32s, 3,200. So this remains a bullish consolidation. Silver, nice bounce here a couple weeks ago at the 50-day moving average. Nice move here. I'll show you, again, this is a spot chart. I'll show you on the futures chart. We can see this here was actually a retest. Silver against the stock market, you have this big resistance here. So we're waiting for silver to break out against the stock market. That would be huge. Gold against the stock market, considering the move in the sector this week, really not that strong. Kind of weak to end the week, remains below this 50-day moving average here, but maybe it's just consolidating before it'll push up like that. Would love to see that. Of course, GDX, GDXJ, incredible week. You can see GDX actually broke out first. That's a clear breakout. GDXJ only broke out by a hair, so the seniors are leading right now. SIL, the silver stocks, this was a resumption of a huge breakout, which I'll get into. Here's the stock market. Here's the 10-year yield. This is a headache. A technical tip for you. When you see moving averages going like that is a market that's not in a trend. That's a headache for you. Don't try and trade it. All right, that's our overview. Let's get into gold, silver, and the miners and be more specific. So again, here we have gold, and notice this is the spot chart here and the spot price. Stock charts used to use futures. Now they're using the spot price. A little disappointing for me, but let's move on. So we can see here, this is a clear bullish consolidation. It's going sideways. Here's the bounce I was talking about. So that's a good sign. Maybe it pulls back a little bit before it breaks out. But if we step back again to think about the comparable breakouts, 1972, 2005 to 2006, what happened after the first leg higher post breakout? They corrected for 4.5 months and 5 months respectively. So we are still only about 3.5 months into this. Well, we're getting close to 4 months into it. So based on that history, gold could still consolidate for another half month or another month or so. So keep an eye on that. Here's gold against the stock market. This was a bounce here, confluence of really strong support here, rising 200-day moving average. This is the retest of this breakout here, which was a breakout out of a 4.5-year-long base. So we'll see. This is just a consolidation. Like I said, maybe we can see it make a move like that. That would be encouraging, but I think this is in the process of moving from bearish to sideways and then eventually bullish with respect to the short term. Now, let's talk about the futures prices and charts for gold and silver. So here's gold. So here is the futures market. So I believe this is a continuous contract. It's the biggest front month contract that you see on most charting platforms. And it appeared overnight that we were getting a breakout in gold because of the new tariffs potentially on some gold products. But then I saw a tweet that said Trump was correcting it or taking part of that back. And so that, I think, was a catalyst for a sell-off at the very end of the day. So you have a bearish candle here. But that aside, the good news is here's the resistance right here, 3450, 3500 or so. So this is in the futures market. So this is a little bit stronger than the spot market. And again, we can see here very close to breaking out. So for me, no biggie if this comes back a little bit and moves like that before eventually breaking out. But for here and now, in a short-term sense, that is a failed breakout. But again, not to repeat myself, but this is a bullish consolidation. Now, silver, okay, maybe I forgot to include the silver futures chart in here, but nevertheless, this is the daily chart for silver. This is the spot market here. And what we can see is that this here, this action here, this was actually a retest of this breakout here. And if you look at the futures chart, which again, I think I forgot to include it, but that shows a clear retest where it actually came and tested support right here and then moved higher. So you think about it like this. This was the retest, and then you have a higher low here. Nice rebound off the higher low. Yes, there's some supply here at 39 and 40, but based on the successful retest in silver, and then you have this rebound from the 50-day moving average, I think silver, more likely than not, going to work its way up to 40, maybe 41, 42 in the next few months. Those are the measured upside targets for silver based on this breakout. There's a couple things pointing to 41. I've said it before, look at the weekly and monthly chart, and even daily chart for silver. You can see resistance at 42. So it's not that far. I mean, it's another 10% or so, but it gets up to that level. Then silver could correct more from that level before it eventually resumes its upward climb to the $50 level. Now, a lot of charts are on the stocks, but before we get to it, let me tell you about the Daily Gold Premium. If you own juniors or you own mining stocks and you're not a subscriber, I would really encourage you to sign up for our service. Just go to thedailygold.com/premium. Scroll down to the bottom of that page. You can sign up. It's $150 for 6 months. And we have a wealth of information analysis for you. Lots of company tables. You can sign up. You can see our model portfolio, which is a real portfolio. You can see exactly the companies we own, our top 10 companies, our top 10 company watch list. We also have a top 10 silver company table. So you can immediately sign up and find out what we think are all the best companies. And it's simple. Our goal at the Daily Gold Premium, we want to make money and then keep it. We want to make a lot of money in this record bull market in gold and silver. We are looking for high quality juniors, high quality companies that have 5x to 10x potential over the next few years. And so we're not looking for penny stocks and really tiny juniors. We're looking for quality companies, the higher quality assets in junior mining. Those companies that are positioned that, again, have 5x to 10x potential over the next few years in this bull market. We want to make big money. We want to help you make big money. And then we'll also teach you how to keep it. And what does that mean? You cut losers, you cut laggards. And when things go really well, you take a little bit off the table. You trim, you sell a third, you sell a half in some cases, or you sell a fourth. That's how you manage those gains, because a lot of people are going to make a lot of money in the next couple of years, but then they're going to risk losing it. It happens every time. So we'd love to have you consider the Daily Gold Premium. Those of you who already have, thank you so much. I really appreciate your business. It's you that allows me to do the work that I love to do. All right, now let's move on and talk about the stocks. I got more than a couple charts here to get to. So here are the weekly candle charts. GDX here, GDXJ, GOEX here. And again, for those who don't know, I like this better than GDXJ as far as tracking the juniors. This doesn't have the mid caps in it like GDXJ. So GDX right now is the strongest. The seniors are really outperforming. Miners broke out of a 4.5-year long base. And so for GDX, the measured upside target is somewhere 62, 63. So keep an eye on that. We're getting pretty close. We're at 58 now. So a little bit more upside. until we get to that measured upside target. For GDXJ, the measured upside target, I think, I have to go back and look, but I think it's in the low 80s. So 72 has a little bit more than 10% upside. GOEX, the measured upside target would be, let's see here, 35.36 minus this. What is that, 18 or so? So that comes in, call it 53, 54, 55. So a little bit more than 10% upside in the juniors. And one thing I want to teach you that I've learned many times, we saw here last week, I pointed it out, clear breakdown from a bear flag. It was a breakdown, minor should have gone lower. But what happened? Well, it's a bull market, so bearish patterns don't always play out. And when a pattern fails, so this is a bearish pattern that looked like it was playing out, then when it failed and went the other way, you tend to get a slingshot move. So that's exactly what happened. From false moves, from false breakouts, you tend to get sharp moves in the other direction. So bottom line, I still think there's good upside here in the short to medium term for the miners. But at some point, we could be coming in to a more significant correction. Talk a little bit more about that in a moment. Silver stocks have broken out. Look at this. SIL, the large silver stocks, up 15% on the week. Or excuse me, that was SILJ. This is SIL. I think SIL was up 14% on the week. So this is a clear breakout of a 12-year long base. It was close to breaking out, pulled back a little bit. Remember, a week ago or so on the monthly charts, I mentioned, looks like we have a failed breakout. No failed breakout. This thing just zoomed higher. So silver stocks have broken out of a 12-year long base. Nobody's talking about it. Nobody cares. Silver juniors, not quite a breakout yet, but looks like this baby will be next. Okay, let's talk about some relative charts, because we can't just look at charts by themselves. You have to consider intermarket analysis. So here we have just the gold stocks against gold. These are daily line charts. And what do we see here? GDX against gold. This baby, last week or two, it's broken out of this base here. This is the measured upside target. Same thing for GDXJ against gold, which previously was a little stronger. It broke out several months ago, but recently, a little correction we had, that's a retest of the breakout. Now that's moved higher. This is the measured upside target. So we are in a bit of the sweet spot here for the gold stocks to outperform gold and the silver stocks to outperform silver. Okay, just got a couple more charts for you. This is another relative one. I really like this. So here we have gold stocks and silver stocks, SIL against the S&P, against the stock market. GDX against the S&P, GDXJ against the S&P, SIL against the S&P 500. And so I've highlighted the last couple months of price action. So here's GDX against the stock market. This looks really bullish. This correction looks like it's really close to ending. This should work its way higher like that. And if and when that happens, that is a breakout of a 4.5-year long base. And for GDXJ against the stock market, it's close to breaking out of a 4-year long base, although several months ago, it broke out of a 3-year long base. So this is a bullish correction. Like I said, this should work its way higher like that. Silver stocks, SIL against the S&P 500, that today looks like it closed at basically a 3-year high. So this is broken out of a 3-year long base here. So what do we see based on these last two charts? What are they telling us? Capital is moving out of gold and into the gold stocks, and capital's moving out of the stock market and into the gold stocks and silver stocks as well. Very good for the sector. Now, here's one thing that gives me pause. It should give us all pause, because maybe after some big gains in the next few months, we got to get ready to do some trimming of the gains, taking of some profits. So this is just GDX with some of the breadth indicators. And here's their new highs divided by the new lows indicator. Here's my indicator, which is the percentage of Huey stocks that are above the 200-day moving average. The GDX data, by the way, looks really similar. This is the golden cross percentage, the bullish percentage index. These are indicators from stock charts. These are breadth indicators, which means they're participation indicators. Now, a market and sector is at its strongest when all the stocks or most of the components in that market or group are rising. That's what you want to see. But the problem is, when it gets to be really high for a while, that's when you start to get too overbought and you can get a potential correction. So bullish percentage index, 100. Golden cross percentage, which is a breadth indicator, I believe this is the stocks that percentage of stocks where their 50-day moving average is above the 200-day moving average. So that's 100%, and it's been pretty close to that for the last few months. So my custom indicator here, I'm looking at the 50-day moving average of basically this data. What's the percentage of Huey stocks above the 200-day? So a 50-day moving average of that, which is in blue here. And we can see at this peak here, look how high it was, like nearly 100%. This peak here, nearly 100%. This is where we are right now. This baby's rising. It's at 97%, and this data hasn't been updated this week. So this is getting pretty close. And another thing to keep in mind, the new highs divided by the new lows. These lines here are at 25 and 30%. I've included a 20-day exponential moving average to smooth the data out. And we can see where the data peaked, like where it got pretty high. Now, recently, up here in April, it did get fairly overbought, but we've kind of had a bullish correction. The market corrected through time rather than price. That's also a possibility. But it shot up to 17. So at some point, if the market continues to move higher over the coming weeks, next month or so, at some point, these breadth indicators are going to tell us that we could be at an interim peak or an intermediate term top in the gold and silver stocks. We're not there yet, but this is just warning that it could be coming after the next bout of strength. So we have to keep that in mind. And so last thing here, daily candle charts here, GDX, GDXJ, SILJ. Here we see the false breakdown here. This was a clear breakdown from a bear flag. From false moves come fast moves. That's what you saw. SILJ never broke. GDX never broke. So this is like a bullish cup and handle here, which potentially, let's see here, this 47.54. So this can measure up to 61. So that's one initial short-term target. Don't have a target for the others, but if we're looking at just the daily price action here, gap here, gap here, gap here, gap here. So as far as the types of gaps, this is a breakaway gap where the market gaps up and then it just keeps moving. This gap here, these are probably exhaustion gaps in the very short term. So in the very short term, look for these gaps to fill. Because we can see here, the last two candles, they tell you the market's getting tired. You can see it here. So very short term, the market could pull back and fill these gaps. But stepping out for the next month or so, remember the weekly charts. I mean, we're still looking at, I believe, a measured upside target of 63, about 80. Not sure what it is for SILJ. And the silver stocks, the larger ones, have just broken out, and SILJ is really close. But at the same time, understand maybe in a month or two, we're going to come into an intermediate term top. And what happens leading into those kind of peaks in the market? When you're at the end of a run, silver stocks usually outperform. So the silver stocks have just broken out. So I expect them to outperform here in the short to medium term before some kind of potential peak in the sector. So that's it for the video. I could have included a couple more charts, but it would have been too long. Let me know what you think. Really appreciate your guys' support. Leave a comment. I'll try and answer as many as I can. Hope you guys had a great week. Thank you so much for tuning in, and I'll see you guys again in the next video next week. Have a great weekend.